Silent second mortgages. What could possibly go wrong? What's up, everybody? One of the biggest U.S. lenders is now offering 0% down payment mortgages, meaning you can buy a house without putting any money down. Does this sound familiar? Could this be the beginning of another housing market crash? With these high home prices and high mortgage interest rates, buying a house today has become completely unaffordable. So is this new loan product the answer to many buyers' dreams? Or will it cause new homeowners to be underwater the minute their home decreases in value? And let's face it, there is a strong possibility of home values going down as the housing market has already softened in some parts of our country. What happens if they lose their job or if they just find themselves unable to pay their mortgage? Will these homeowners with zero equity in their house have to sell at a loss? Will we start to see more foreclosures and short sales like we did back in 2008? If something is too good to be true, there is usually a catch. So today, we're going to take a look at an article by R.T. Swaminathan for MarketWatch titled, "One of the biggest U.S. lenders is offering 0% down payment mortgages for first-time buyers. Here's the catch," as well as Redfin's latest housing market update by Dana Anderson titled, "Price drops hit highest level in 18 months as high rates dampen buyer demand," to see if this may be the perfect storm causing new buyers to regret buying their home just as soon as they sign those closing papers. Let's dive right in. Home buyers will be able to buy a loan without putting any money down under a new loan program launched by United Wholesale Mortgage, one of the largest U.S. mortgage lenders. Sounds pretty good, right? Well, let's dig a little deeper. Here's what they say. UWM will give eligible buyers a second lien loan of up to $15,000 in the form of down payment assistance for 3% of the home's purchase price. The loan will not accrue interest or require a monthly payment. Buyers can also choose when and how often they want to make payments on that second loan. But here's the catch. You can't refinance or sell your home until the entire loan is paid off. In other words, there will be a balloon payment, or in Latin terms, the buyers will have to pay it all at one time if you want to sell or refinance. This is called a silent second mortgage, which in my opinion, it isn't so silent. Because if I had a $15,000 bill due all at one time, I think I'd want to scream. The aspect of this program that makes me nervous is the silent second mortgage. Annalise Lederer, Senior Policy Counsel, the nonprofit Center for Responsible Lending, told MarketWatch in an interview, "It's great that there's no interest on it, but it's a balloon payment, and borrowers need to understand what a balloon payment is. A balloon payment refers to a bigger than usual one-time payment that is required by the lender at the end of the loan term," according to the Consumer Financial Protection Bureau. On its website, UWM states in fine print at the bottom of the page that the second loan has no minimum monthly payment requirements, a term of 360 months, and is fully due as a balloon payment upon the occurrence of either a refinance of the first mortgage or payoff of the first mortgage or the final payment. Sound familiar yet? If you were around and active in home ownership between 2008 and 2012, this term was ubiquitous as many homeowners lost their homes to foreclosures or short sales as a result of not being able to pay this balloon payment. And this program is attracting the most vulnerable people. The Pontiac, Michigan-based company's new program will be available to first-time homebuyers and people earning at or below 80% of the area's median income, the company said in a press release. So picture this. You're making a decent living, but you're not excessively rolling in dough. You decide to buy your first home with no money down, a super high interest rate, and home prices which are basically at an all-time high. And then home prices soften, and maybe even interest rates go down. Maybe something happens in your personal life that makes these super high mortgage interest payments a little challenging to pay. You can't refinance without paying this massive amount to take advantage of the lower rates, and you can't sell without taking a loss and have to bring money to the table which you don't have, otherwise you wouldn't have taken this loan out to begin begin with. So you're stuck without very many choices. So in comes the bank, the possible foreclosure or short sale, and there we have it. Discounted properties on the market, bringing all the other home values down, and at this point, a housing market crash seems imminent, or at least a strong possibility. So there are 3 points in time when this payment is due, Lederer noted. When a person refinances, pays the mortgage off, or sells the house. If a homeowner is prepared for these circumstances, there is no issue at play. But if you don't have a plan, it can result in foreclosure on the house, she warned. Lederer cites in the article that one way borrowers can avoid this scenario is by talking to a housing counselor before applying for such a mortgage. They don't actually explain what exactly a housing counselor is. I mean, is it a realtor? Or is it an attorney? Is it a therapist? Is it a financial advisor? I'm not intentionally being naive, I just really don't know who they're referring to. In response to what happened back in 2008, when poor underwriting practices were a key driver of the subprime mortgage crisis in the United States, Wilner says that UWM's program is different. Back then, there were low and no down payment loans, where lenders made loans to people who were eventually unable to pay them and lost their homes. Wilner says it's such a different time now than it was back then. Underwriting guidelines are very, very different now than they were in 2006 and 2008. And last time, we had a whole lot of oversupply of houses. Now, demand is way heavy compared to the supply that's out there. UWM's program is similar to down payment assistance programs at the state and local level. So this isn't a new concept, according to Wilner. But it's important that home buyers fully understand the terms of the loan they are taking on before signing any documents, one expert said. The concept of getting help with a down payment is not a new one, Wilner said, but this program really simplifies it for everybody, for the broker and for the consumer. UWM was the second largest company in terms of how many mortgages it originated, according to a recent CFPB report. Yeah, it seems pretty simple to me, but also very dangerous. I want to know, what do you guys think? The program is ultimately really good for people who can swap their rent for a mortgage and make those monthly payments comfortably, Lederer said, because it can be the foothold that you need to get into home ownership. My opinion is that if you can't afford to put a down payment on a house, you may want to rethink buying one, especially in these times when home prices are so high. Swaminathan writes that housing activity is expected to slow in 2024, according to Fannie Mae, as mortgage rates are expected to end the year averaging 7%. The government-sponsored enterprise expects the 30-year mortgage rate to average 6.7% in 2025. Rates going down may be great news for buyers, but with this program, refinancing is not an option unless the buyer can pay back that loan in its entirety at the time. Even Lederer admits that this program can be dangerous. While such programs have the potential to really open up homeownership, Lederer added, they can also be a major issue down the line for home buyers who don't understand what exactly they're getting into. I would caution buyers out there about buying a home with zero down and having literally no equity in your home when you buy it. There could be some real problems down the line if your home loses value. In Redfin's latest housing market update, Dana Anderson writes that more home sellers are cutting their asking price, suggesting sale price growth could soften in the coming months. Nationwide, 6.4% of home sellers cut their asking price in the 4 weeks leading up to May 26. On average, the highest share since November of 2022, according to Redfin. In addition, the median asking price dropped roughly $3,000 to $416,623 in the last week, the first decline in 6 months. Anderson also writes that the number of days active listings have been on the market started rising year over year in May for the first time in 8 months, hitting a median of 46 days. Together, those metrics suggest that sale price growth could soften in the coming months as persistently high mortgage rates turn off home buyers. Other metrics from Redfin's latest housing market update are new listings are up 7.8% year over year. Active listings are up 15.2%, the highest level since December of 2022. 44.7% of the homes sold in the first 2 weeks, down from 49% a year ago. 31.8% of the homes sold above the list price, down from 34% a year year ago. So homes are still selling really fast for a lot of money. In fact, the median sale price is up 4.3% year over year, reaching another all-time high. It is important to note that sale prices are a lagging indicator because they are typically negotiated at least a month before the sale closes. And months of supply is up to 3.2 months nationally, up 0.5 points from a year ago. With all this data showing still high home prices and a softening housing market, I really don't think this is the right time to offer first-time buyers a way to buy a house with zero money down. It just sounds like a recipe for disaster. Like the saying goes, if something looks too good to be true, it probably is. If you missed last week's video when we talk about how some industry insiders think the housing market has hit rock bottom, definitely check that one out next. And I wanted to just take a minute because my youngest kid just graduated from high school yesterday, which makes me a very proud mama and also a very old one. So I wanted to say congratulations to all of you parents out there who just had kids who graduated high school. It's a great achievement. So I wanted to say congratulations. Thanks for watching. I do appreciate it. Bye.